as we step into 2026, I think it's very important for us to understand what's the key trends of the market, how is the market going to shift, so that you buyers and sellers who are in the market can better position yourselves as we actually enter the new year. So firstly, we will actually touch on a bit on some of the market reports by DBS, especially the population and home supply portion. Firstly, we have this report over here saying that actually Singapore has dropped to the 6th position for millionaire migration in 2025. So I think one thing that we really want to think about is, will this actually trigger the government to relax the ABSD for foreigners? We all know the ABSD for foreigners purchasing Singapore properties has been adjusted to 60% in 2023. And I think this is possibly one factor that has affected the consideration of the high net worth individuals when they are actually choosing a place for their migration. So this was actually reported in the Henry Private Wealth Migration Report. And the key indicators that I just wanted to bring your attention to is actually the high net worth individuals' inflows and outflows, and also the fastest growing wealth markets. These are the two indicators that they're actually using for this report. So as you can see over in this table over here, Singapore is ranked 6th among these other countries. And so for the high net worth individuals, when they actually look at a place for migration, they will actually think about acquiring properties in these locations as well. So with our 60% ABSD for foreigners, this could be one big consideration for them, as taxes is definitely part of the consideration. This actually affects them in terms of their business or in terms of their wealth as well. Okay, so on top of that, we already have restrictions in terms of foreign home ownership. As you guys know, foreigners aren't allowed to actually own a landed property unless they actually get approval from LDAU. So these are factors definitely that they will consider. So with the additional hurdle of the higher ABSD, this will actually affect our ranking in their hearts in terms of looking for somewhere for relocation. So however, no matter what, Singapore, we are still actually within the top 10 in this table. So I think we are still very, very popular location when high net worth individuals are considering for relocation, because I think our stability of the economy, our safety, cleanliness, these are also factors that will actually come to play when high net worth individuals do consider places for their migration. Okay, next. So in terms of population, I think population growth is definitely back on track, as we can see over here in this table. I think definitely during COVID, we actually took a little slow turn during the COVID period because of the restrictions in terms of travel. But right now, we are definitely back on track, and currently we're actually in that 6.11 million in terms of our whole population in Singapore in 2025. And over here, we have this chart that actually shows this projection of this whole overall dwelling units across the next few years up to 2030, 2040 to support this population growth that we are estimating as well. When we talk about property prices, I think one thing also, from our population, how does it relate to our property prices? So with this demand from our population, of course, people must be able to afford it for the prices to be supported as well. So this is also a table showing the estimated incomes of people and also projected income of our residents and households to really support this property price index up to 2040 as well. So right now, our next segment, we actually go into the focus of our government in general in terms of the areas development of our country. So right now you can see over here, I think our government is generally focusing back into our CCR region, rejuvenation, redevelopment of the area. So here you can see a few articles talking about the rejuvenation of our city center, which are CBD area. So currently we already have ongoing schemes like our CBD incentive scheme that's given to developers to actually encourage them to rejuvenate the whole city center area, redeveloping of our buildings, and also introducing maybe more residential developments into the area. Yeah, so we'll be expecting the rejuvenation of Orchard as well on top of the CBD area. And also Marina is going to welcome, I think our MBS, Marina Bay Sands, is going to welcome the fourth tower that will also include a 15,000-seater entertainment arena. Then this definitely is going to bring in a lot more crowd, a lot more events, activities, happenings around the area as well. For Marina South area, we are also going to be welcoming this whole district where there's gonna be like offices, retail malls, and also residential developments all in one area together. So it's envisioned as a mixed-use residential district, and also even underground mall streets will actually be introduced to this area as well. So this area, I think right now what we know of is actually One Marina Gardens sitting on one of the plots and has already been launched. And we are expecting a few launches, few more plots that's actually going to come up in the subsequent years as well. Okay. So this is for our development plans, our government's development plans and focus. I think next for us to really go into the numbers, the number of dwelling units that we are going to, this report has shown us in terms of the estimates. I think there's a few things that we probably have to look, zoom into. So right now, condos is likely expected to go up to 120,000 units, and HDB is to go up by about 200,000 units in about 15 years' time. Okay. To go back to this chart again, we can tell that actually HDB is likely going to go up by 200k units by 2040. Okay, so currently we have about, in terms of HDB, you can see over here about 1.142 million. Okay, so for HDB, I think right now we can see over here from this chart in 2024, we have about 1.14 million HDB units in Singapore. And by estimated by 2040, we're going to expect about 1.34 million. So about increment of about 200,000. So for the private sector, I think currently we are already having about 73,000 landed and 380,000 condos/apartments in Singapore. For landed sector, I think we are not going to be expecting much growth in terms of the landed dwelling units. Maybe a very, very slight increment due to maybe further subdivision of land, developer buying big plots of land, subdividing them into maybe 3 to 4 units to sell. I think this may have a little bit of increment, but of course not going to be significant. So assuming that our landed new number of units generally remains the same, that brings us to an increment of about 120k condo units by 2040. So if we were to divide up to the number of years compared to now, I think about 15 years, each year we're going to be expecting about 8,000 condo units to be introduced in the market per year. Yeah, so I think that kind of is actually quite consistent in terms of this estimated number from what we are seeing. So in 2026, we are going to be expecting a total of 8,100 plus units across 17 projects that's going to be introduced into the market. So I think in terms of that, it's actually generally quite consistent in terms of the forecast. Okay, so forecasts like these will happen only because the population growth is back on track. And I think in terms of to meet the demand, the government has to plan for all this, and that's why there's also such forecasts as well. Okay, next we're actually going to this sector. We talk about liquidity and flight to safety assets. I think this is something that most people are more concerned of in terms of when the economy is not doing well, interest rates are not as high. Where do people actually put their assets? Where do people put their money? Okay, so we can see in terms of our foreign direct investment, you can see that investors are generally moving their strategic assets to a location where, in terms of their long-term productive investments, is actually insulated from this political, legal, and economic volatility from around the world. Yeah. So in terms of long-term, because of foreign direct investments, generally it's actually a very long-term kind of investment. I think investors right now, for them to actually confidently put their money where they want to invest in, they probably also look at things that actually gives them more stability. Yeah. So I think in Singapore, in terms of our reputation, we're generally safe, stable. We have a very good government. I think in general, this is actually a very safe operating environment for their businesses. And I think that's how we actually have increment in terms of that's why we're actually seeing more foreign direct investments inflows into our market as well. We can see over here, this is actually in terms of our third quarter 2025 outlook. I think we actually have already seen a few Fed rate cuts here and there, and think interest rates are generally coming down already. Just announced another round of rate cut just in December. Okay, so right now as interest rate goes down, I think many people, I think retail investors or anybody who are looking at really just reallocating their assets from stocks, bonds, and from bonds and things like that. Okay, so I think as the market changes, I think people also will think about reallocating their funds, reallocating their investments. And I think just one big trend that we are already seeing right now is actually Singapore is actually one of the rare nation where when the gold price rises, our property prices actually follow suit. So why is this so? One similarity that can observe between Singapore's property market and gold prices is that actually both assets are actually viewed in general as a very stable asset, and then it stores wealth, it hedges against uncertainty, particularly for high net worth individuals and also investors lah. Okay. So this, I mean, it's not necessarily one causing the other, but more of like in terms of the characteristics of these two assets. I think this actually forms a lot of gives a lot of benefit to investors lah. So they actually want capital preservation and hedge against uncertainty. I think Singapore, similar to gold, I mean Singapore property, similar to gold, is something that I think a lot of investors would actually be willing to put their money into. Next, I just want to go into this portion where I talk about the season transition. So right now we are actually experiencing a season transition that I feel that many buyers actually you do have an opportunity to actually make use of. And what do I mean by that? Okay, let me just go into details. Okay, so the first season after each shift of size regulation might actually be one of the best opportunity. So why do we say so? I think right now what we are aware of is definitely we are actually currently in the post-harmonization transition season where we see that there's a change in the UR regulation in terms of how we actually count in terms of the floor size. And what do I mean by this opportunity? So we can actually refer this back to our in the past where we had when we first had cooling measures that was actually introduced. Yeah, over here we have this table talking that's comparing that shows the trend of our property price index and also our cooling measures, the different points of cooling measures. So I think cooling measures, the TDSR and ABSD, they were first introduced in 2013. And through these cooling measures, I think we can see a few trends. And one thing for sure is, of course, after every cooling measure, there's a knee-jerk reaction from our buyers, definitely. But in terms of cooling measures, what do they do usually? Usually, they actually affect a few things. One thing is actually, of course, taxes. There's ABSD, and number two, we have TDSR. So TDSR is actually something that's going to affect the affordability of most buyers. Okay. So if we were to break down this whole table, this whole chart, we can see that we have this baby boomers era where they do not have any form of cooling measures pre-2000s. Then after that, pre-TDSR area, which is the 2010s, 2000s era, early 2000s. Then after that, after year 2013, we have our post-TDSR pre-harmonization era. And then right now we're in the post-harmonization era after year 2024. We are actually seeing more and more post-harmonized projects coming out to the market. So yeah, so this right now we are in this post-harmonization era in 2024. Okay, so what I want to delve into is that currently we are actually seeing even smaller sized units in the market currently today. Like I mean, for example, River Green launched their 4-bedder less than 1,000 square feet. I think this is currently the first smallest 4-bedder we've seen so far in the market and actually sells so well. And what is the reason? Okay, so as we can see over here, the sizes of the unit are generally getting smaller in the market. There is also a change in the market behavior to the change in type of property that the developers are actually introducing to the market. And developers are definitely being more strategic in terms of design and the mindset behind the scenes of this. Okay. So from 2013 onwards, I think one thing we really definitely have to take note is the introduction of TDSR, which in turn affects the loan that a buyer can actually take up to finance this property purchase, and this in turn limits the quantum that they are able to afford with the same amount of income. So what this means is that consumers are definitely more and more price sensitive, and as the year goes, we see that the TDSR has also been tightened, been lowered, and I think definitely this affects the budget and the overall quantum price that buyers can afford over time. And developers, what do they do to actually adapt to such measures? Is they will build smaller units, and that because PSF is something that they probably maybe cannot adjust as much. So what they can do is they actually build smaller units and make the quantum something more palatable for our buyers, especially after the tightening of TDSR. And these can be actually illustrated by these two developments in Bishan. We have Skyview and Sky Habitat over here. So Skyview was actually a post-TDSR pre-harmonization era. It was actually introduced, it was actually launched during the period of time, and then Sky Habitat was a pre-TDSR era. Okay, so we all know that Sky Habitat is well known for its very big spaces within the unit itself. And then Skyview is what we have seen, very standard layouts that we should see in the market. So in fact, you can see over here the two charts that we have. Skyview definitely has experienced a better appreciation since TOP compared to our Sky Habitat, which actually took a really long time to actually see a decent appreciation. The reason why this is so is because Sky Habitat generally offers bigger layout units with the same unit type compared to Skyview, and then this also generally translates to the higher quantum in terms of the number of bedrooms. If we were to compare them, and this naturally translates to a higher quantum with the same unit type. So for example, over here we have our Sky Habitat 1-bedder. We are actually looking at about 710 square feet, very huge floor plate, very good space. Quantum wise, 900,000 to about 1.3 million. And then compared to Skyview, they actually have units which is within the 400 plus square feet range. So quantum wise, 680 to 900k. Yeah, so this, as you can see, the quantum difference naturally for buyers who are looking for 1-bedder, if they don't mind, I mean 1-bedder is just 1 bedroom. If they don't need so much space, they have limited budget because of TDSR, naturally they will actually, location is just side by side, naturally they will actually go into a property that actually is more affordable for them. And that's the reason why Skyview actually comes in as a better product than our Sky Habitat. TDSR, as it limits the loan quantum of our buyers with the same income, it will restrict the affordability of these buyers, and naturally they will turn into units that are able to still fit their lifestyle, still fit their space needs, but can offer them a lower quantum. Okay, and this is how this whole TDSR actually changed this whole market behavior and the preference of buyers. Okay, so right now we are actually in this post harmonization period, and there is definitely also another shift in terms of our buyers' behavior as well. Okay, so right now we're actually in the post-harmonization. This year we're actually seeing more post-harmonized projects that's launched, and all of these projects will actually be done in 2023, where this whole harmonization was introduced, and developers were a little bit uncertain, but they bid for the land for pretty good prices, and I think that's the reason why in 2024 we're seeing such attractive quantum prices that we are seeing in the new launches. This can be illustrated by just these two projects. I think we are all very familiar with Sky Holland, which is actually just situated right beside One Holland Village. One Holland Village was actually launched during the pre-harmonization season, whereas Sky Holland is actually the first post-harmonization season project in the area. So like Sky Holland, I think definitely is actually providing a much better quantum for buyers, definitely because in terms of sizes of the units, generally with the icon latch removed, the sizes that's contributing to the floor space that they are paying for is lower already, and that already naturally reduce some of the quantum that we have over here. Also because the developer actually bidded the per land during the time of uncertainty and the time of change that was introduced by URA, they actually got the land at pretty much good price, and that's why they were able to translate and give buyers this advantage to actually also enjoy very good PSF in terms of the sale price on the launch day itself. So right now, I think what I want to bring across to you guys is right now we are definitely going to be seeing a new benchmark price in 2026, because in 2026 the launches that are going to be launched, they are actually bidded in 2025. I think definitely there are going to be two classes of products in terms of new launch in the market in 2026. One will be the new launches, which are all the projects that are going to be launched next year. Second one will be the balanced new launch units that we're going to see in 2026 in the market. Okay. So in terms of new launches, benchmark prices that we are going to be seeing in 2026, I think my personal opinion in terms of the estimation of the PSF prices, OCR, we are definitely going to be seeing something, prices hitting about 2,005 per square foot. 3-bedder or 900 square feet, you probably expect about 2.25 million. RCI region, we are definitely going to see 3,000 per square foot. I think right now, for our Penrith, we are already looking at prices around the range. In terms of PSF, I think 3-bedder 900 square feet, we're going to be expecting about 2.7 million. CCR, we will definitely be seeing prices hitting about 3,005 per square foot. 3-bedder, about 900 square feet, we're looking at about 3.15 million. By the balance units definitely are offering very attractive PSF prices, and I think for buyers itself, if you are looking for an investment project, really do look at them. I think they really provide this opportunity, and once they are gone, you're to have to accept the new PSF prices that we're going to see from next year onwards. Okay, so if you're not sure which project should you go for, I mean, PSF prices, what makes sense, and then do reach out. We can have a chat and we can actually discuss, which are the ones that will be suitable for you in terms of your investment goals or even your own stay requirements. So developer, right now, I think we usually have a 5-year cycle behavior. So developers, once they actually finish building their projects, they are usually more land hungry because they need to top up their land bank and they have new projects to work on. Because once projects complete, they don't want money anymore, right? Yeah. 2025, we've already seen that the developers are actually more hungry. A lot more bids were actually received for many multiple plots, and I think all their bidding prices were generally quite close as well. Very high interest in many of the plots that we've seen that were tendered in 2025. Okay, so just zoom into a few particular projects. I think Chuan Grove, likely we're going to be expecting a PSF launch price of about 2008 to 2009. In Bayshore Road, I think definitely also 2,800 to 3,002. Yeah, with the land bid price that they have, break even is 2,005 for them, so likely not surprised that they're going to launch about 2,008 to about 3,002 per square foot. Dorset Road, another very popular land plot. I think we are also definitely going to be expecting prices like 2008, 2002. This is actually a summary of all the projects that's actually going to be upcoming in 2026, and if you're interested, I mean, if you want this, do reach out. I can just really send them to you. We all know that the whole new launches take-up rate, especially the fourth quarter in 2025, I think we've seen very fantastic results and very fantastic take-up rates from the buyers. And I think all this, what will trigger is definitely the government really reviewing and, introduce new cooling measures in the market. And I think really that's something that I feel that definitely the government probably will be looking at right now. So for buyers, if you really have been sitting on the fence in terms of thinking whether you should take action, I think right now really do take action while you still have the opportunity to, and do take action while you still have very attractive prices in the market, which we will probably not see moving forward. Yeah, so if you wish to really discuss further, do reach out and I'm happy to guide you.